Okay, good evening, everyone. My name is Yvette Dudley. I'm from the Du Bois Bunch Center, the legal arm, and welcome to tonight's program, Loss Mitigations, Knowing Your Options in Foreclosure. This program is sponsored by the Du Bois Bunch Center for Public Policy's legal arm and co-sponsored by the Neighborhood Housing Services for Brooklyn CDC. We also have presenting today Angela Cummings from NHS Brooklyn, Jjais Forde, a private practitioner, and myself. We are presenting on the foreclosures because many people are going into foreclosure. Foreclosure are rising as we speak. And unfortunately, with the current administration, a lot of the regulations that were in place to protect homeowners have loosened over time. Now, we can still do a lot of loss mitigation options, but we have this program sponsored in order to arm ourselves with the right information so we can defend our homes and save our homes. So the Du Bois Bunch Center and NHS Brooklyn, we commonly put on these programs to educate the community so we could, again, empower ourselves to do what is needed in order to address any type of foreclosure problem. So the first one that is presenting tonight will be Angella Davidson from NHS Brooklyn. And if I could ask Mr. Hodges if you could give her the screen sharing capability just in case she needs it. Now, Angella Davidson is a HUD certified housing counselor, and she works at Neighborhood Housing Service of Brooklyn CDC, Inc., a HUD certified housing counselor agency. Angela has spent over 15 years working in the financial industry on Wall Street. Angela joined NHS in 2008 and is currently the program director working in various areas, including foreclosure prevention and intervention, loss mitigation, financial counseling and coaching, and reverse mortgage counseling. She is committed to assisting her clients to preserve wealth through preservation of home ownership. Angela holds degrees from Barnard and Baruch College and is certified in the following areas: financial capability and credit counseling, foreclosure intervention and default counseling, home ownership counseling for program managers and executive directors, home ownership counseling, reverse mortgage counseling, training and development, estate planning, and emergency preparedness and disaster. Now I present to you Angella Davidson, and before the program is over, I'm going to give you all the persons who are presenting all the contact information that you need, as well as distribute to you different handouts, such as a hardship letter and different things you may need in case you pursue your own loan modification process. So I welcome everyone here, and I definitely welcome Angella Davidson. Good evening.
Good evening. Good evening, Ms. Dudley. Thank you for having me on and having NHS Brooklyn as a co-sponsor of this event tonight. As Ms. Dudley said, we do not want anyone to lose their homes. And so NHS Brooklyn, along with the Du Bois Center, have information and services that homeowners can participate in if you find yourself facing hardship. So before I get started, let me just introduce NHS Brooklyn. We're a HUD nonprofit housing counseling organization. We were founded back in 1982 with a mission to help homeowners to buy, repair, and to keep their home. Tonight, I'm here to talk about foreclosure. And so I'll start off with the mission and goal of NHS's foreclosure prevention program. And that is to empower homeowners with the knowledge, resources, and support they need to preserve and stabilize housing, to overcome financial hardship, and to prevent and avoid loss of homeownership. And how do we do that? We do that by helping homeowners through early intervention, personalized guidance, practical solutions that stabilize their housing situation. We connect participants with financial assistance, mortgage relief programs, legal aid assistance, and community-based services that support long-term home retention. Our education and counseling on budgeting, credit management, and sustainable homeownership to reduce the risk of future housing instability. And how does NHS program get started? So we get started with an intake process. And through that intake process, we get information such as the client's name, their address, telephone numbers, how many people are on the loan, the property address, the type of property, and we collect documents. So some of the documents that we collect are your ID, of course, um, pay stubs. 30 days pay stub is always required, tax returns for the last 2 years, bank statements, and depending on the type of income that you have, if you're someone on Social Security, we're going to request your Social Security award letter, your pension award, if you have those types of benefits, as well as if it's a two-family home and you have tenants, we're going to require your leases and bank statements showing the deposits going into the bank account, right? For your lender to evaluate you using rental income, they have to see that you're depositing the rental income and that you're also claiming that rental income on your property tax on your your 1040s, right? Your tax statement. So it's important that you are depositing as well as filing that on your taxes. Some of the other things that we will documents that we require are your mortgage statements. If you've had modifications in the past, we're asked for prior copies of those prior modifications, any delinquency notice that you have received from your servicer, any foreclosure documents if you have been served with foreclosure documents such as list pendants, summons and complaint. And I know Attorney Forde will talk about those things when she presents. And any kind of documents that you're getting either from the attorney for the lender, or from the courts, as well as two very important documents that we always ask for as well is your homeowner's insurance policy, right? Oftentimes people will say to us, but I pay that with the mortgage every month. It's important for you to have a copy of your policy. You need to understand your policy, and you need to know what you're covered for, right? So you have to have a copy of your policy, even if you're escrowed, right? So that's what we're talking about when we say you make your mortgage payments every month through with your mortgage payments. That means there's an escrow account that is set up by your servicer where they're collecting your insurance payment as well as your property taxes, and then they disperse that to those entities, right? And we're also going to look at your expenses, right? Your utility bills, any debts that you have out there, including credit cards, if you have installment loans, right? So the reason for doing that is because we are going to create a budget. It's important, right, for us to do that so we can see where you are and to see if you have enough money to qualify for loss mitigation, right? Because loss mitigation does include money. All right. We also will collect your mortgage documents so we can see the type of loan that you have. We're going to need your loan number when we're speaking to your servicer. That's one of the identifiers when we call in. Do you want to identify by loan number? Do you want to identify by Social Security, right? So it's important that we gather that kind of information. We also want to see what your monthly mortgage payments look like and the interest rate that you currently have. Because when we think of loss mitigation options, right, those things come into play, and we'll cover that as we move forward. Once we've collected your done the intake, then we're going to meet with you for a one-on-one counseling session. And at that session, we're going to look at things like how far behind are you, right? Are you 1 to 2 months? Are you 6 months, right? How much are you past due? How much are you in arrears? Have you received any late notices? Have you received any demand letters saying that, you need to pay, otherwise we're going to start foreclosure action, right? So we'll ask for those things to evaluate where you are when we're counseling with you. Another thing that we're going to look at is what caused your hardship for you to fall behind. Right? Is it job loss? Is it a reduction in income? Is it divorce? Is it illness? Right? Is it death? So it can be anything. So we want to make sure that we're looking at all options so we can help to guide you to where you need to be. Right? Is the hardship a temporary one? Is it a permanent? Has it been resolved before you came to us? But because you're still delinquent, you need assistance with those arrears. Or is this going to be something that is ongoing, right? And so once we've collected all of that information, then we're going to sit down and then we're going to put this budget together. Right? We're going to see what you're paying for the mortgage, how much you're paying for utilities, how much you're paying for food, right? So all your monthly expenses. Then we're going to look at what your desired outcome is. Is your goal to keep your home? Right? If you want to keep the home, then we're going to look at different loss mitigation options. Some of them include loan modifications, repayment plans, forbearance. You might be able to refinance if you're not in default, but you're anticipating going into default. And so if a high interest rate might cause you to default, how about looking into refinancing into a possible lower interest rate, right? It's not always possible, but that is an option, right? Is your desire to sell the home? Because if that's the case, then you have to let your lender know. So we know how to guide you in that process, right? And then we will walk you through the foreclosure process in New York. So one of the things when we meet with someone, we're going to look at the different options that are out there, right? It's important to understand your loan. Is it an FHA loan that you have? Is it a private loan? Is it a Fannie or a Freddie loan? Because all loans have different options available when someone is behind, right? I mentioned loan modification, repayment plan, reinstatement of your loan, a forbearance, or what we call deferral. So, for example, let's look at FHA loss mitigation, right? And they use what is called a waterfall to determine what options and what assistance is given to a homeowner in default. All right. And so FHA loss mitigation starts off with a repayment plan. You're going to want to make sure that if you can actually enter into a repayment plan, that is the first option that they're going to offer you. They will also offer you forbearance, right? So FHA has two different types of forbearance. They have what is called an informal forbearance, and that is one that is offered to you verbally over the phone, and that is good for 3 months, right? After 3 months, if you're not able to get back on track, you let them know that, my situation has not been resolved. I am not able to start repaying the loan. And so I'm asking for additional time. And so at that time, they're going to offer you a formal forbearance. A formal forbearance now comes with paperwork. They're going to put it in writing. They're going to send it to you for you to sign and return. Now, if your forbearance comes to an end and you're still not able to resolve, FHA has what they called a standalone partial claim, right? And a partial claim for FHA is when they look at taking 30% off your loan balance at the time that you defaulted, right? They're going to see what 30% looks like. And if it's enough to bring you to reinstate your loan after they've paid down that 30%, then they will offer you that standalone partial claim, right? If that standalone partial claim does not work because you do not have enough, when they calculate that 30%, it is not enough to pay off the the arrearage that you have in order to bring your loan current. So at that time, they will assess you for what is called the partial claim along with a modification, right? Sometimes it does not work. They might have to offer you a regular loan modification. About 3 years ago, FHA came up with what is called the payment supplement program, where they'll take your loan and they're going to refinance you into a 5-year loan, right? So although your loan matures in 30 years, you're taking you down 5 years where they're going to reduce your interest rate. If you're not already at 3.5%, they will reduce you to 3.5%. Right? But that is only for 5 years. And they also do that along with that same 30% of partial claim. So you have to be someone who has enough partial claim for this to work for you. but that is still a good program, right? If someone can get into it, it gives you 5 years to think about what your options are and to work out other options to take you out of that 5 years, because after 5 years you go back to your regular mortgage payment that was based on that 30-year mortgage that they gave you. Um, right? So let's talk about that. Then let's look at what Fannie and Freddie, what they have. Fannie and Freddie also have their loss mitigation programs that includes forbearance as well. However, theirs is different than FHA. Theirs is formal and it's always going to come in writing. They're going to have reinstatement and repayment plans, right? So they're going to evaluate you for what you qualify for. And they also have their flex mod, which is similar to the payment supplement, where they will refinance you into, then it was 4%, but no, it's going to be at market rate, right? We're around 6%. So they will refinance you into a new mortgage loan at a higher interest rate, but it takes you out of the foreclosure and out of losing your home. And then they also have what is called the payment deferral program, where they will defer a percentage of your loan, more often than not the amount that you're in arrears. They will either capitalize that into the loan, or they defer that as a standalone new mortgage on the property. So now you have two mortgages. However, you're not making payments on that mortgage, right? It stays there until your 30 year becomes due, right? It matures. So it might be maturing in another 20 years. That loan is going to become due and payable at that time as well. So always remember that if at any time that you get back on track and you are now possibly looking to refinance, that loan is going to come up on title when title is pulled. So you always want to remember that, right? Example here, we had a client who recently did a refinance, but she had had a partial claim before. So they did not realize that that partial claim was due and payable at the time when she did the refinance. That was not paid. And about 4 weeks after she closed on the loan, she got a letter from HUD stating that we were informed that your loan was refinanced, you're owing this amount, it's due immediately. She was panicked because she had no clue that when her refinance was done, that they did not include that partial claim in there, because they also didn't know and she forgot to tell them. So it's really important for us to remember, always make sure you make a note of that partial claim if you were to ever get one, or if it's a deferred amount that is put to the back of your loan. You always want to make sure. All right. So refinance we spoke about. And then for homeowners who are maybe 62 years of age and older, and they're not financially able to continue to make mortgage payments to keep up the property, such paying taxes, insurance, your water, non-payment of taxes and water in New York becomes a tax lien. Tax lien also leads to foreclosure. So we always want to make sure that our homeowners are in a financial position to pay those things, because tax lien takes precedence over your mortgage. So you can lose your home for $6,000 and you're owing the bank $350,000. Just that as an example. So we want to always make sure our seniors have the assistance they need. And so there is a reverse mortgage option that is out there, and it is not for everyone. So people get annoyed and angry when they hear about reverse mortgage, but it's an option for some people. It's not for all of us. And yes, reverse mortgage can be managed. It doesn't mean that the homeowner is going to lose the home at the end of some period. She cannot leave a legacy. It's just how families come together to use reverse mortgage. For some people, that's the only option, right? They might not have family. That might be the way to go. So it's there if they need it. We do not push reverse mortgage on anyone, but it's an option that we have to talk about when we talk about loss mitigation. We also want to look at bankruptcy. And bankruptcy is not done with NHS Brooklyn, but through our partner or attorneys that we work with. Miss Jjais is attorney Forde is on here, and she might touch on bankruptcy. But bankruptcy is also an option to prevent someone from losing their home to foreclosure. In New York, we have loss mitigation through bankruptcy, right? Where you can apply for loss mitigation through bankruptcy if you file, and you have a better option sometimes of getting loss mitigation when you file bankruptcy than just coming through an NHS or an attorney Dudley to apply for loss mitigation, right? The courts are more favorable to people going through bankruptcy with loss mitigation. And again, we are not pushing bankruptcy, but it's an option, and we do have to explain that. And then there are other times when resources are available, such as we can help you to apply through HRA one-shot deal to help you to bring your loan current, or to help you to get financing from HRA towards a loan modification, right? Sometimes you have to pay down a percentage of the arrears in order for them to modify you. Or if you can get that assistance from HRA, if it's enough to pay off the arrears, it takes you back to making your monthly payments. And the beautiful thing with that in getting back to square one is if you have a low interest rate, you're going to keep that low interest rate, right? Because all you're doing is paying what is owed and continuing on your merry journey. Now, if you have to get a loan modification, oftentimes your interest rate is going to change. And the same thing we're trying to avoid pushes you to that when you get that higher interest rate, because now your mortgage payment is going to go higher. So it's really important that you understand what you're getting into when you get a loan modification, right? We want to make sure that you understand what you're getting into. And so that's one of the part of counseling, when we counsel with you, and then we help you to submit that loan application, right? We help you to fill it up and to submit it and to talk to your servicing agency about what options are available and what you're trying to do. So we will help you to submit that loss mitigation application. Now, there are times when retention is not available, all right? Or it's not something that the homeowner facing this hardship can get out of. So you might consider a traditional sale, where you're selling your property, you're reaping your equity, and you're walking away from that property. I know it's hard for us to think about selling our home, walking away from our home, but sometimes that's the option that's available. And it makes sense for you to take it than for you to be forced out of your home, right? And it's also one of the times where deed theft becomes very rampant. Not sure Attorney Forde is going to talk about those things tonight, but when we are facing hardship, everyone knows, right? Especially if you're served with a summons and complaint, the whole world knows that you're in foreclosure or facing foreclosure. And so everyone is going to come to you, and everyone is going to tell you how they can guarantee that you're going to get a modification. But you have to first sign some documents. Oftentimes we're signing away our deed, not knowing that we're signing away our legacy, right? So it's important to understand that when you are facing hardship and you're thinking of working with someone, make sure you're working with someone who's reputable. Make sure you understand every document that you're signing. Make sure you're on the phone when you're speaking with your servicer, right? We have had clients who have come to us and Mr. Brown, oh no, he said he spoke to them and they said X and they said Y. You always want to be a part of the conversation, right? It's important for you to hear what is being said to Attorney Dudley. And I know she's reputable and she's going to make sure you're in the room with her when she's calling your servicer to speak. Same thing NHS does, right? You sit in the room, we call, we ask the questions, you're there to hear everything and to help to make the decision about your affairs as well, right? We don't make those decisions for you, but we guide you through the process. Another non-retention option might be one that is called a short sale, right? And what is a short sale? You're asking the lender to take less than you're owing, right? They have to approve that short sale. If they do approve, when you're applying for a short sale, you're going to work with a real estate agent. You also want to make sure you have an attorney in the room, and you might also work with a counseling agency because we can help you to put the applications together before you get to a real estate agent, because everyone has to be in on that. And then you have what we call a deed in lieu, right? Deed in lieu is where you're asking the lender to allow you to give the home back to them without going to foreclosure, right? You still have to list the home, and it has to be listed for at least 30 days. They want to see that listing, right? But you do not have any deficiency judgment if you decide to just give the home back to them after it has been marketed. With the short sale, it's possible that you can have a deficiency judgment, but most people who are working with you, an attorney, attorneys on here, an NHS Brooklyn, your realtor, they're going to make sure that when they're negotiating that there will be no deficiency judgment um, after you have gone through the short sale. And I think that's my presentation for this evening. I was really just supposed to talk to you about the process of the counseling piece and what we do. And I will hand it back to Attorney Dudley.
Thank you so much, Angela Davidson. You always give a wealth of information. I sit and write notes to myself, and that's why you are a trusted partner with the Du Bois Bunch Center, and you are a fixed agency, a trusted agency and reputable agency in Brooklyn. So I applaud you, give you a standing ovation for your presentation. I
Thank you.
put your I put your information in the chat. We do have a question that I want to pose to you and see if you or Jjais, or I'll try to answer it myself. What are the solutions for individuals who do not work due to a medical reason, but they still have a mortgage? Do you want to address that?
Oh, okay. So I can take a part of that, and
Sure.
I guess
I'll
Attorney
take a
Forde
part.
can
Sure.
take, and you take a part as well. So it depends on the type of loan that you have, and I should have mentioned that earlier. For FHA loans, they have uh forbearance plan for people who are unemployed. So it's called the unemployment forbearance, and you can get that for up to 12 months. I've seen it gone further than 12 months into 24 months. So it depends on your circumstances, your doctor, the doctor's letters and information that we provide with your locksmith that they will allow for that. And then I know some private lenders will also allow for forbearance during the time that you are under that medical leave or unemployed due to medical circumstances. Now, if you're not going to go back to work, then that's a whole different conversation that we need to talk about. So I'll let you take the other part.
Yes, and to address part of that, I'm not sure as far as your question, if it says who do individuals who do not work, but are you receiving some type of income, a disability income, or any income at all? You could also, which I will go through in my presentation, you can also, some lenders will factor in household contributions. So if you have adult people living with you, adult children, or any other relative, aside from a tenant, you can factor that in by them giving letters, and they could give pay stubs, and we present a package to the lenders so they can see that income is income. So you can do that. And I would always say try for a loan modification anyway, just put it in regardless. And I'm going to formally introduce Jjais Forde a little later in the program, but Jjais Forde is our expert attorney specializing in bankruptcy, and I would like her to just address the medical question because I know she can. Jjais, you want to address that question as far
Sorry,
as,
I
yeah.
was talking, but I was not
Yeah, okay,
unmuted.
okay.
Hello everyone. Good evening. So with regard to, well, and Angela and Yvette did an excellent job of addressing the question, but from a bankruptcy perspective, there are different chapters, and chapter 7 would be adequate for someone who's not working, where there is no equity in the home. That's we could hopefully find some source of income, because unfortunately there's no structure that can just eliminate the debt entirely. I think that's a misconception with bankruptcy, and when I'm speaking about that, I will explain that some people believe that you file chapter 7 and the whole debt goes away. That's not what happens. So the other option is chapter 13, where you would form a reorganization, you'd form a plan for how you're going to pay it back. In chapter 13, you're required to have some form of income. So if you're not working at all, Chapter 13 would not be an option for you. And we would have to explore whether Chapter 7 as a non-retention option, in other words, you might be short selling the property or selling the property outright. But if there is outside of any programs that Angela may have, if your balance is small, excuse me, I can't imagine being able to just rid yourself entirely of the mortgage debt because you're not working.
And also, just to quickly, and I'll move along with the program to quickly address this question. And as it relates to bankruptcy or my limited knowledge of bankruptcy, Jjais, if she does have some type of income to pay maybe a reduced loan amount, but she has a lot of other debt, maybe that Chapter 7 could address that debt. Of course, the house can't have any equity, and reduce that debt. So that debt is out the way, the credit card's out the way, a lot of medical expenses may be out the way, and then she could just free up her money to just address the mortgage. Am I right?
Exactly. That is a strategy where we
Okay.
would file 7, but we have to be very careful about the 7 strategy because 7, and I don't know if Yvette wants me to go into entirely everything, but it does give the trustee a lot of power. So the trustee is in control of the estate and decides whether a property, well, I shouldn't say decides, but can make an application to the judge for your property to be sold out from under you. So we have to be very careful about 7s and using them strategically when there's equity in the home, depending on how much, because there's a certain amount of equity we can protect. But if it's above that amount, we may have some challenges. So it's definitely something that is explored on an individual basis.
And for this individual, I'm putting all the information in the chat. And when Jjais Forde gets to her part of the presentation, I'll put her information in the chat, and you're, of course, allowed to reach out to any of us, including Jjais Forde, to further that conversation. But moving along with the program, again, thank you, NHS, Ms. Davidson, for giving us all the mechanics of loss mitigation and all the options that exist. And now I will also provide further detail just in case some people want to venture out and do part of it themselves. And I'll also talk about the advantage of working with NHS or agency like the Du Bois Bunch Center, where you could get more of advocacy and promoting your interests. Let me put our information in the chat. So the Du Bois Bunch Center's legal arm, we have 2 main clinics. We have our estate planning clinic, where you can speak with an attorney regarding any type of estate planning matter, wills, trust, or any probating a will, administration of a will. And then we have the real estate clinic, where you can talk to an attorney about any real estate need that you have, deed theft, foreclosure, or any type of real estate problem that you may have. So I'm putting that information in the chat now, and you can always reach out to us and attend one of our clinics. Just make an appointment and we'll speak with you. We also accept certain cases on a case-by-case basis for litigation, for deed theft, for foreclosures, and we may even attend some of your foreclosure settlement conferences and help you resolve those foreclosures through a loan modification. So I'm putting that information in the chat. And then I will share my screen. So Miss Davidson from NHS Brooklyn, she went into all the different types of loans that a person may have. So I'm providing you with specific information as to how you can find out what type of loan you have. Why is that important? Because the type of loan you have may guide you to the right loan modification that is available to you. Not all loan modifications or loss mitigation resources are available for every type of loan. So the first thing you want to find out is, what type of loan do I have? Is it Fannie Mae? Is it Freddie Mac? Is it HUD insured? Okay, because that opens up a lot of doors, including that partial claim, which is to me one of the most powerful things you can do. Get the government cash in on that insurance. Remember, it's a government insured loan. You're paying PMI every single month. Cash in on that and see if they will pay part of that insurance claim and pay your arrears and just put this silent mortgage on the back of your loan. So you can look up, I'm going to put these URLs in the chat after my presentation, but you can look up the Fannie, your loan to see if it's a Fannie Mae, Freddie Mac, or a HUD insured, FHA insured loan. You may have to put in some specific information, your name, your address, and the last 4 digits of your social security number. If you use these URLs, it's a safe site. It's a government site, so it's not going anywhere. If you just Google it on Google and some sites appear, I'm not really sure what's going to come up, but I'll put these URLs in the chat so you can find out what type of loan you have. And I also put the HUD FHA cares. We're going to do another program on this one day on landlord tenant, saving your home through landlord tenant, effective landlord eviction matters. And just as a quick aside, if your house has an FHA insured loan, you have to serve certain, you may have to give that tenant additional notices aside from the state notices, like a 14-day demand for rent. So that's why I put that in there. But you can look up your loan through these 4 URLs, and I'll put that in the chat. Now, when you are thinking you're falling behind your loan, you want to contact your lender, just look at your mortgage statement, because as Ms. Davidson said, one of the most important things to deal with is that interest rate, right? Many of us got our loans maybe early 2000s, 2006, 2008, maybe 2015. And during that time, the rates were pretty low. So, or maybe you did a loan modification and you have like a 2.5 interest rate. I know a lot of people out there have that. So if you have that, just look at your mortgage statement and check your loan to see if what that rate of interest is. Because as Ms. Davidson said, when you modify that loan, your rate, that rate of interest may change. It may go higher. And if it goes higher, then of course that may increase your payment, unless they increase the amortization of it. So always check the rate of interest. This way you know the type of conversation you're about to have with your lender. And also, when you look at your mortgage statement, see if they're escrowing for taxes and insurance. Look at your taxes and insurance and see if they're escrowing for that. And you could also see if some
I'm
other
sorry, the slides are not showing.
the
None of the slides are showing. You're still
oh,
stuck in. I'm sorry to
okay.
interrupt.
No, it's okay. 1 second. Let me stop. Let me thank you for that. Let me do it again. Sorry. I should have asked. Does anyone see the slide?
Yeah, because it was showing up in the chat that no one could see the slides, but
Can
then
you
I
see it
had
now?
to.
No,
No,
all we're
it's
seeing
just
is
stuck there. Yeah, you just got to click on the part that says slides, PDF. None of them are presenting.
we also
Yeah,
need to
Yvette,
click on the
click on the
specific window.
PDF
Yeah,
file that's named slides.
this
This is
right?
showing us your files and folders.
That's what it's showing. Okay, 1 second.
Yeah.
Okay.
You might
Okay,
need to download it first, Yvette.
Okay, 1 second.
Okay.
You have to stop sharing and probably select the
Yeah,
right
that's
thing
what
to
I'm about
share.
to do.
Probably, yes.
All right, 1 second. And I did a drive run before people came on, and it worked. All right, 1 second. Okay, 1 second.
This may be a Zoom share settings solution.
Yeah, no, I'm just gonna open up my to see if I see it on my screen. and you still don't see it, right? No.
No. So
Okay.
usually what it would do whenever you start sharing, it
Mm.
would ask you which um screen you'd like to share. Does it give you that option, Yvette? There you go. It's called Review Your Mortgage Statement. I think you're muted.
Okay. Am I still muted?
No, you're
Okay,
good now.
good,
I
good.
can hear you.
Okay. All right. And all right, sorry about that.
That's all
So
right.
we'll go back. Okay. Can you see the URLs now?
Yes, ma'am.
Okay, so I'm going to put all these in the chat when I'm done with my presentation, but these are the URLs that you can check your loan. Okay. And then we were on the interest rate just to see what type of interest you have to make sure you don't want to obviously get a higher interest rate. But again, I'm more of an aggressive advocate. I say keep putting in for that loan modification and see what they come back with. And see if it's a higher loan modification. Look at the payments. It's various things that you can look at when you put in for your loan modification. So now when you contact your lender and you're going through that loan modification, you're going to create a paper trail. You're going to do that, number one, just for yourself. But if it ever goes to a foreclosure litigation, New York has a bad faith defense that you can use against your lender if they just fail to negotiate with you. And remember, if it's a Fannie Mae, Freddie Mac, or government insured loan, they must negotiate with you to a certain extent. They don't have to give you a loan modification, but they have to at least look at a package. And if they're not, then your notes or your journal that you're keeping will kind of help you out when you get to those foreclosure settlement conferences. So now, when you first make contact with your lender, what documents do you request from your lender? Well, number one, you ask for a loan modification package. It's just as easy as that. You pick up the phone. Hi, I need a loan modification package. You don't have to tell them you're falling behind. I'm struggling. You don't have to tell them anything. I just need a loan modification package. And a loss mitigation packet, because remember, a loan modification is part of a loss mitigation. Ms. Davidson went through all the types of loss mitigation that you can have, such as the forbearance or short sales or anything like that, a loan workout. So you want that entire loss mitigation package. You also want a reinstatement letter. A reinstatement letter is a letter from your bank telling you exactly what you owe to put your loan back on track. So they may have stopped taking payments from you, and you're trying to figure out, well, how much do I have to pay? You want a reinstatement letter. They may tell you a certain amount. You owe $39,000.20. That's not good enough. I need to see exactly to the penny, how did you come to that figure? Okay, so you ask for a reinstatement letter. You also ask for a payoff letter, so you could kind of compare that to the value, to your own personal knowledge of the value of your home. So you want a payoff letter as well. And you can see if any hidden fees are in there. You can see if they're charging legal fees when you don't think an attorney did any work at all because you're not even in foreclosure. So the reinstatement letter and the payoff letter will show you any type of hidden fees that are in their request for the amount due. And then that's how you can try to challenge them on that. You also want a payment history. I have several cases where the client is saying, I did pay, or they're missing payments. And I ask for a payment history, and we find out that they did not include some of their payments. So you ask for a payment history to make sure that your payments are all factored in to what they have. And then you ask for an escrow analysis. They may be escrowing for taxes and insurance, and you want to see how are they using the money. How did your escrows get so high or so low? So you're asking for an escrow analysis. So these are the 6 documents that you would need to ask for as soon as you contact your lender. And you can ask for this even if you're not struggling with your, especially 3, 4, 5, and 6, you could ask for that at any time. So let's talk about insurance and property taxes, right? On most loans, there's an escrow held for your property taxes and your insurance. So you make a payment, and that a payment is divided into 4 categories: your principal, your interest, your homeowner's insurance, and your property taxes. So I always feel that, any situation, we first try to remedy the situation with, like, what can I do to help myself in this situation? One thing that we can do, that we don't even need the bank to modify our loans, we can definitely look at our insurance and taxes and see if that will lower the amount of our monthly payment ourselves. So you look at your insurance. Homeowners insurance, like, you want the lower insurance, lowest insurance price wise, but most effective, right? So obviously we're not just going for the lowest price, because certain endorsements, certain coverage may not be in there. But if you have similar coverage and you're offering it at a few $100s less, even $50 less, I'm taking the lower insurance. So you look at your mortgage statement, you see what you're paying in insurance for every year, and you could always change your insurance. You just get a new policy and you send it off to your bank, and they have to use that policy. Okay, so you can lower your payments just by looking at insurance and just searching around for a lower insurance policy. You should also see if you are capitalizing on all of your property tax exemptions and abatements. New York City offers many of them. New York State offers many of them. And they can substantially decrease your property tax bill. So many of them have to be renewed every single year, and then they fall off. And then your payment got higher and you're wondering why, and then you can't pay, and then you're almost in foreclosure. But this is something, I don't even need a loan modification. Don't mess with my interest rate. I, on my own, will try to maximize my property tax exemptions and abatements. And I put the New York City property tax benefits website there, where you can actually apply on your own for tax exemptions or abatements. Now, the Du Bois Bunch Center, we held one in April because April was a big deadline to file. September is the next big deadline to file. I know NHS Brooklyn, I think they had one recently. Ms. Davidson, do you have one coming up? If so, would you like to announce it? Because this is something important that people should go to learn, because usually the New York City representative from the Department of Finance is there to assist you.
Yeah, that's true. But we usually do ours in early January because the deadline to file is March 15th. So
Okay.
because we're behind March 15th, we won't hold one until January again. And Department of Finance definitely will be there. But we do
Okay.
have an event coming up on Saturday where the Department of Finance tax advocates are going to be there. It's going to be at Brooklyn College. So if you do have some questions regarding your property taxes, the same thing Miss Yvette is talking about in terms of exemptions, you can get some questions answered there as well.
Okay, and you can put that information in the chat as well, so they can talk to someone from the New York City Department of Finance. Thank you. And then also be aware of forced placement insurance. So remember, if you took out a loan and from the inception of your loan, you're paying the property taxes and insurance, and you stop making those payments, at some point, every time you make a payment, when you are paying, the bank would take out part of that payment and pay your taxes and insurance. So obviously, when you stop making payments, they don't have your money anymore to make the insurance or tax payments. So they're using their own money. That's number one. That's how your escrows build up so fast. Number two is, once they see that your policy ran out because you're not paying your monthly mortgage payment anymore, they're going to go out and get their own policy, because your policy will eventually lapse because you're not sending in your mortgage payment. So they get what's called forced placement insurance, and that's usually double or triple the amount of your policy. So then your monthly rate shoots up. So now when you're trying to modify your loan and you're wondering where all these arrears came from, well, it partially came from forced placement insurance. So always look at your monthly statement to see if you have forced placement insurance. When people come to me, they're behind on the loan, the first thing I tell them is get rid of the forced placement insurance. Go out, get a policy. The person hasn't paid a mortgage in a while, so they may have a little money saved up to pay an insurance policy for a year. You just get an insurance policy and you email it to the bank and tell them, please cancel that forced placement insurance policy. Those payments will drop. So now when we're trying to work out that that loan modification, those arrears are not increasing at that substantial rate anymore because they have a normal policy. Also know that that forced placement insurance policy does not cover you, it covers the bank. So if someone slips and falls on your property, you're not covered. If a tree falls on your property, on your house, you're not covered. If your tree falls on a neighbor's house, you're coming out of your pocket. So forced placement insurance does nothing for you except to increase your arrears dramatically. So these are the documents, Ms. Davidson went into that. These are the documents that you would need. You would need that whether you came to the Du Bois Bunch Center, to one of our clinics, or whether you went to NHS. These are most of the documents that you would need to be successful in a loan modification. Okay, so again, I can email any of these slides to you, but you definitely, and we're going to go through the hardship letter. We're going to go break down the mechanics of the hardship letter, but they need the pay stubs. And so you should be saving these things, tax returns. Some people have not filed tax returns. I would say try to get your taxes up to date. And then they need those property expenses for your property, as well as rental property, such as leases, monthly rental income, and proof of rent. Now, that's where many of the clients seem to have the challenges. When you are trying to use rental income, they need to see rental income. So the first thing that a bank will ask for is a lease, because that's the easiest thing, right? But I'm not a fan of leases at all, unless you have a month-to-month lease. So, and some people just don't have leases anymore, or the lease expired. So that's okay. You can still use your rental income by showing the proof that you're receiving it. And the way you receive the can prove that you're receiving it is by showing bank statements showing my rent is going into the bank every month. Now, the reality is some of us are receiving rents from our tenants in cash, right? So someone's giving me $1,500 in cash and I'm not making it to the bank because I have other expenses to pay. And by the time I make it to the bank, I only have maybe $100 to deposit. But when you're doing a loan modification, and I'm sure Jjais would get into this too when you're doing the bankruptcy, Chapter 13, but when you're doing the loan modification, then we just have to change our ways just for a minute, just to get approved. So when that tenant gives you rent, you have to deposit the whole thing. My tenant gave me $2,000. I run to the bank and put in the $2,000 and I'm good. I can run back to a next bank or get on another line and take out 1,800 of the 2,000. The bank really doesn't care about that. They just need to see the proof of rental income. So please deposit all rent into your bank and have copies of your bank statement showing that you're receiving rent until the loan modification is approved. Self-employed people are always a challenge because they're not getting that W-2. They're not getting a pay stub. Some of them may not use a pay stub to pay themselves. Well, then their income is under more scrutiny because it's coming in maybe thousands at a time, maybe none for 1 week. So you would just prove your income by a profit and loss statement. You could ask any bookkeeper or CPA accountant to do a profit and loss statement for you. They should do one by the year, and then they should break it down per month because a bank has to see your monthly income. So you ask for a profit and loss statement. And then if you're conducting your business, if you have any licenses, if you're an attorney, you can produce that license. A realtor, you can produce that license. Any licenses that you may have to run your business, or any type of corporate filings. You may be a LLC or a corporation, or you may just have filed a business certificate with your local county because you're doing your DBA, you're doing business as. 1099s, many people, you're doing a lot of contract work and you're just giving out 1099s, so you're getting 1099s. And also, again, we have to change our ways as we go for these loan modifications. So all that money that you're getting has to be put into the bank. Now, hopefully you have a business account and a personal account. Otherwise, you can still try to do it. You can still get a loan modification approved, but just for business reasons, you should have the two separate. Okay. So while we're doing the loan modification, make sure all of your income is being deposited in the bank. And then you have the CPA letters as well to authenticate yourself that this business does exist, that they do file tax returns. Okay. Let's talk about the hardship letter. Now I'm going to put sample hardship letters in the chat for you to just revise and use yourself. But let's look at the mechanics of a hardship letter. It should be very succinct. I fell behind because my hardship is either temporary or permanent, but now I'm okay with the payments. It should be very, very hard and succinct. Okay. If the problem with some hardship letters is they're too long. So you have to remember you're dealing with a loan representative who probably has a lot of things to do. So they're reading your hardship letter. It should be succinct, but it should narrow in on, think about it. Like one day I was up to date on my mortgage, and the next day, the next month, I start falling behind. I always ask the client, okay, just tell me what happened. Let's zero in on that. Not, I met a tenant. They came from my church. I thought she was an angel and she was related to my family. She moved in. And then when that tenant left, so I'm like, oh, it's not about that tenant at all. You have to really just narrow in on what caused the hardship, whether that hardship is temporary or permanent, and now I could afford it. People who have tenants, many times that tenant is not paying rent. So the hardship is still temporary. It's not permanent. At some point, I'm assuming you're going to evict that tenant and get a new one. So it is temporary. Or maybe a rental unit was vacant, but now I made the repairs, and 2 months from now, I know I can rent it out. Or someone had talked about a medical condition, and now I'm okay. Or now my daughter moved in with me and helping me with the rent. You have to be very specific on, well, what happened? Why should the bank believe now that you can keep up with your payments, if that is your situation? If it's permanent, then Ms. Davidson had talked about all the ways that we could try to still do a loan modification with some type of permanency. Okay, but I am going to put some sample sample hardship letters in the chat so you could kind of just paste and cut. And we talked about this. That hardship letter should cover your loan history. Talk about that, whether you have, many people may not have adjustable rates anymore, but if you do, put that in there. Like, this adjustable rate is killing me. It's going up and down, and right now it's just going up and it's killing me. So you're kind of telling your story real quickly in this hardship letter. And then again, be very specific on the event that led to you falling behind, and talk about your income, expenses, and your current situation, how things have changed. That last sentence, I always, when I talk for clients, I always tell them like kind of what I'm looking for. Now, I don't give them a specific proposal, but again, maybe I want to keep my rate of interest, and maybe I don't owe that much, and maybe my income is now even better because I have a higher paying tenant. So I don't need a loan mod at all. I don't want you to touch my mortgage at all. I just need a loan workout. So you're not asking for a loan modification, you're asking for a loan workout. And that is, I'm going to make my regular monthly mortgage payment. I know I'm maybe 15,000 behind, and maybe I could just add $1,000 every month for the next 15 months, something like that. Okay, and you just put that in there. Okay, or you can just ask them to put it on the back of the loan, but they're going to come up with whatever plan that they have for you. But you want to be clear whether you're asking to modify my home loan, or nope, I can make my regular monthly mortgage payments, but I'm going to do something a little extra. So that's a loan workout. And then that lump sum. As soon as we fall behind, things happen. So you fall behind. But maybe I can't afford my monthly payment of $3,500 a month, but I am making $1,000 a month. So that 1,000, you should just be saving. Just save what you can, because at some point over the course of a year, if you fell behind and you saved $1,000 a month, you'll have $12,000, and maybe you could offer that towards your loan modification plan, and they'll bring your arrears low enough for them to look at your income and look at this little this lump sum that you're going to send in, and now this looks like a viable plan. So don't be afraid to offer a lump sum. I have clients, don't tell them I have, $7,000 extra in the bank. No, we're going to tell them, like, are you trying to save this home? We are going to tell them. You may not. Now, maybe the first thing you want to do is put in a loan modification without it, just to see if what those terms look like without it. But then if they deny it, which is another thing I'll get into in a minute, if they deny it, then file for another loan modification and say, well, now this time I want to offer a lump sum. Okay, don't take that denial letter as the period in your dilemma. So why do loan modifications fail? Many of them don't fail on the merit, on the substance at all. They fail because something procedural just isn't working out. So many of them fail because of missing documents, right? They told you to send 6 months of pay stubs and you sent 5, or you're missing one of those pay stubs within those 6 months. Your expired documents, right? So you're just taking a long time to submit this package. These documents only stay good for a certain amount of time. So even though you sent a hardship letter, if that date is too old for their standards, let's say it's 3 months old, 6 months old, they're going to want you to start sending in a brand new packet. Okay, so you have to be very, very diligent when you're calling this bank. Incomplete packages, that speaks for itself, but incomplete packages are also, you sent in your tax returns, but you didn't sign and date it. So these loan modifications are being kicked back for any reason at all. It's an arduous task. Some people handle them on their own, and some people, of course, they go to NHS and attorneys and things like that because they just don't want to be bothered. And I'll also tell you the advantage of going to NHS or the Du Bois Bun Center. And then undocumented income, like you make what you make, right? But it's not documented. But let's just say you have a W-2, but you also teach people how to play the piano every Saturday, and you charge for that. But you're not setting it up as a business. You just go on Facebook, hey, you know, I teach, and it's about $150 per session, which I think is a lot. But let's just say that's what you do. Well, until we get this loan mod approved, everybody that comes to you, we're going to give them a receipt. Okay, we're going to document this. And then when you get that receipt, that $150 from that person you just taught to play the piano, you're going to put it in your bank account, even if you take it back out. But you're going to put it in your bank account because now your story matches the finances. Your story matches the bank account. Okay. If you're a handyman and if you're a W-2 and you do something else, but you do know how to sheetrock and you do that on the weekends on the side, you're going to give receipts to everybody. You're going to put that money in the bank right away just so they can see it, even if you took it right back out. All right. Off the books income, we're going to have to try to get some type of letter or something to show that this is what you're making. Unrealistic budgets. That's saying in this day and age, when I go to the grocery store, I only spend $75 a month, right? So that's unrealistic. So they're going to want you to come up with their realistic budgets, excessive debt obligations. And then you just don't follow up. Like you sent it in and you're just thinking they're going to respond to me. They don't really have a vested interest in responding to you. I mean, they have foreclosure option, right? So it's really it's up to you to keep calling them. You know, what's the status? What's the status? What's the status? So once a week, I would call the bank and find out the status. And then, of course, as Ms. Davidson said, they have trial payments. And of course, if you miss a payment on the trial payment, they may knock you out from the permanent because they'll say you can't keep up. Okay, but yes, I'm giving you how to do this on your own, or at the very least, how to aid the agency or the attorney that you go to, or DBC's legal clinic. But what is the advantage of going to certified housing counsel like NHS Brooklyn or DBC legal clinics? Well, as Ms. Davidson said, they can help you with the budgets and your financial portfolio. Okay, so maybe you're saying I'm not making enough to pay the mortgage, but they're looking at certain things you're doing and help you make certain adjustments. And by in a couple of months, all of a sudden you're seeing with these certain adjustments that I'm making to my daily spending habits, I can now pay this mortgage. All right. They can assist with that workout package. They could put it nice in a pretty little bow and submit it to the bank like they're your advocate. And again, certified housing counselors like NHS, they have that coveted resource, which is that partial claim. So everyone just can't go and ask for a partial claim, but NHS Brooklyn can. Certified housing counselors can. They can approach the proper resources and ask for that partial claim. And then it's just succinct and clear communication with the lenders. Of course, it's an emotional thing for you. So maybe you just want to hand that off. And then we're going to go through the foreclosure process real quickly. We're not going to go into it a lot, but as soon as you get served with foreclosure papers and you put in an answer, even if you don't put in an answer, with most residential mortgage foreclosure cases, you are entitled to a settlement conference, a foreclosure settlement conference, which will usually come within 45 days. Okay. So at some point you will get a foreclosure settlement conference. You have to go to that settlement conference. You have to go to that settlement conference. That's when the court is telling that bank to stop what you're doing. We're going to have a discussion with the bank attorney, and the borrower and see if we could work something out. So you have to go. If you don't go, then there's nothing to work out and they move along with the foreclosure. The foreclosure cannot go forward so long as the case is sitting in the foreclosure settlement conference part. But the Du Bois Bunch Center Legal Clinics, we can help you with that. We, by case basis, we can appear with you at these foreclosure settlement conferences. You would just make an appointment at one of our legal clinics and talk about that. And some of the foreclosure cases we can also assist with, especially if you inherited a home that had a foreclosure or you're subject to deed theft with a foreclosure. So that's the advantage of dealing with why should I go and get assistance on to NHS Brooklyn or DBC Legal Clinic or even an attorney. I would say to stay away from many of these private loan modification companies, especially if they are going to charge. I would just go to NHS Brooklyn, DBC Legal Clinic, or an attorney. Okay. I know people who have gone to loan modification companies, not attorneys, not a certified agency, and they have gone to loan modification companies, and those companies said, I will help you save your mortgage. You're just going to pay what you can to us, and we'll hold it in escrow, and at some point we're going to approach your bank. Well, we know where that went. First of all, I think it was Letitia James who sued them and put most of them in jail for that. That doesn't work. Okay. I know some loan modification companies who will tell you that you're not going to get a loan modification so long as you're current in your loan. That's also a lie. I've gotten people approved for loan modifications, even though they're current, because there's something that may happen in the near future that will warrant a loan modification. So I would just say stick with the certified housing counselors or the Du Bois Bunch Center's legal clinics or an attorney. So let's talk about if someone passed away and they had a mortgage, what do I do? Well, there are several options that you have. First, that loan may be assumable. It may be a government insured loan. Well, how do I know it's a government insured loan? Well, that was the first slide that I had trouble with actually. I'm going to put those URLs in the chat, but if it's a FHA, VA, or USDA loan or government insured loan, you can assume that loan. So your loved one has passed away. There's a FHA loan on there, and it's due and payable. I can see as an heir of that property, I have to go through some certain channels, but I can ask that bank, is this loan assumable? And if they say yes, then I can ask for an assumption package. I need an assumption package. And that assumption package, basically you're applying as if you're applying for a regular loan. So yes, they'll look at your credit, they'll look at your income. They're going to put you through the same process as any other borrower. But the great thing is now you are taking over your loved one's your deceased loved one's loan on those old terms, and they're the ones who had the low rates of interest. So I can assume this loan at that same interest rate in all the loan terms. Most conventional loans are not assumable. Well, how am I to find out if it is assumable? I told you how to find out if it's government insured. Most of them are assumable, but you can also go to ACRIS. That's the next slide. You could go to New York City ACRIS, ACRIS. You could Google it, make sure you're at the right URL, and you can look up the loan. You put in the address, and then in fact, we're going to give an announcement that we actually have a program on this coming up soon. But you're going to look up your ACRIS. You're going to look up the mortgage. You can actually look at the document, and then you're going to sit there and read all the boring legalese of that document, but somewhere in there, it would say whether that loan is assumable. And if it is, and it's your loved one who has passed away, you're going to call that bank and ask for an assumption package. Secondly, you can use your inheritance as a down payment. So my loved one passed away. It's just me and my sister who are inheriting the property. She doesn't want it. Well, I have to buy her out. She doesn't want the house, but she wants her inheritance. So I'm going to, if we own it 50-50, I only owe her 50% of the value of this house. That's it. And if the bank is saying, where's my down payment? I have 50% equity in there. So I'm using that down payment as my equity as my down payment. You go to an attorney who knows what they're doing, and they could structure that deal that way. You go to a loan and you get a new loan, and you pay that loan off that's in foreclosure for the borrower who just passed away. And then for the reverse mortgage, we went into that in our last program. But for all reverse mortgages, if your loved one has passed away, you're related to that loved one, you may have to show some paperwork, but you are entitled to pay off that loan at 95% of the value. Of the appraised value of that home. So the loved one has passed away. You call the bank, you ask for an appraiser to go to the home. They appraise the home. So it doesn't matter if I owe $1 million on it. If the house appraises at $600,000, I only have to pay 95% of the $600,000 to that bank and pay off that loan, and the reverse mortgage is paid. Okay, I would just go out and get a new loan, and I could save that house. Okay, and then Ms. Davidson did talk about deed in lieu options, which is just giving the house back to the bank, right? They want the house vacant. My loved one passed away. I live in Florida. I don't want the home at all. There's no equity in the home. I just want to give it back to the bank, but not so fast. We want to know if we could get paid for doing this, right? I mean, it's our home. So there's no equity. That bank also has an incentive to take over this home and not go through an entire foreclosure process. So what is that worth? You go to an attorney who will negotiate a settlement. We've negotiated settlements. They call it cash for keys. I don't like that word, but whatever. It's a settlement for giving you this house that's underwater anyway. Instead of you taking 2 years to foreclose, because I'll just hire an attorney that knows how to delay everything. So I'm not going to go into this because Ms. Davidson did an excellent job in talking about, but these are 7 different ways that you have loss mitigation options. No mod is just one of them. Okay, anyone that needs copies of these slides, just let me know. I'll send it to you. And this is the foreclosure process in New York. We're not going to go through this step by step, but my message to you is that every step along that foreclosure process, from the time I start struggling with the loan up to the moment right before that they sell the house, I can do a loan modification. I can do any type of loan loss mitigation option at every step. So if you get denied, you keep trying. Okay, because there may be some reason like, hey, you didn't look at my income properly, or last month I wasn't making this rental income and this month I am. And then I will share all the information for with you in the chat as far as how you get in contact with everyone. So that's my presentation. I'll share the hardship letters with you in a sample cover letter as well. So now I want to move to, I'll stop sharing my screen. And I want to move to Jjais Forde. Let me just check the chat to see if there were any questions. Oh, everybody's saying, yeah, I could drop the slides in the chat. But before, everyone was saying you can't see the slide. So I'm going to move to the next part of our presentation, which is Jjais Forde. Jjais Forde is an excellent attorney. She has presented with us before. She's a real estate attorney, and she specializes in bankruptcy, real estate litigation, foreclosures, loan modifications, and closings. She is admitted in the state of New York, in Washington, D.C., and the Republic of Trinidad and Tobago. So if you have any legal issues over there, she's the person to call. So I offer you Jjais Forde.
Hello, everyone. Good evening. I apologize in advance for any struggles with my voice. I'm overcoming whatever that was that I caught 2 weeks ago with the lingering cough. So please bear with me. I've got my trusty water here, which I forgot today in court, but hopefully that'll help. So I was enjoying the presentations by Angela and Yvette. I was so engrossed. I even learned a few things that I didn't know. They were so thorough. And I was very impressed. It's always fun to hear from colleagues. So I'm here to talk to you tonight about bankruptcy and how it can be used. So Angela took you from the beginning. You've gotten that notice and you're wondering what to do. You go into an agency, just like you see in those mailings that you get, where they tell you who are the certified counselors that you might reach out for help for. And Neighborhood Housing Services of Brooklyn is one of those. Then Yvette took you to, okay, now you're in bankruptcy court, or even, I mean, excuse me, maybe they filed foreclosure, maybe they haven't yet, but you are exploring the loan modification process, either outside of court or within the loss mitigation process that they have, the foreclosure conferences that they have mandated in the Supreme Court. Now, when I come into the scene with bankruptcy, usually other options have failed. So now it's time to enter the bankruptcy arena. One of the things I like about bankruptcy in general is that, well, it's federal court, and I find the banks tend to take it more seriously. And Angela mentioned something like that. But when you step into federal court, it's a little bit of a different ball game, a different arena. And whereas the banks may pull some stunts in Supreme Court, they tend to clean up their act a little better in federal court. What we are lucky to have is 3 wonderful judges in our Eastern District of New York Bankruptcy Court. We had one is newer. We had a wonderful judge, Judge Nancy Hershey Lloyd. She retired, but she was definitely an excellent and fair judge when it came to loan modifications. We now have Judge Cooper. But we've got 3 judges that really care about individuals and what can be done to help them save their homes, right? So one of the things I want you to understand about bankruptcy is that it is an option, but it must be handled carefully. Angela spoke of deed theft or briefly she mentioned it, and certain scams. There are scams that involve bankruptcy also. So some of those people who are looking to steal your deed, they're lurking around like sheep and wolves in sheep's clothing. So they come offering or seeming to offer assistance, right? Be very skeptical of people that come and knock on your door. Because as Angela said, a lis pendens is filed. That's public. Everybody knows you're in trouble. And what happens when sharks smell blood? They start swarming. So you may find people knocking on your door, sending a slew of letters. Now, it's better if you start with one of the agencies that are listed as certified HUD agencies. However, and foreclosure counseling agencies. However, if you're now at the point where you have to go to bankruptcy, you have to understand that some of those investors, or scammers, I started calling them, but they'll call themselves investors, are seeming to help you, but they're just lingering around until you fail, and in some ways guiding you to failure. So they will sweep in and say, oh, just file bankruptcy and stop the sale. And they don't actually tell you what you need to do to effectuate the bankruptcy. But here's what's happening. When you first file a bankruptcy, you get something called automatic stay. Now, this will last through the duration of the bankruptcy, provided you do what you're supposed to do throughout the bankruptcy. And we'll talk about those things. Now, that's very powerful. And that's something else I like about federal court. You can pump the brakes and say, no, not today, not my house. We're going to work this out, right? Now, the second time you file within a year having a dismissed case, you only get 30 days automatic stay. Unless your attorney knows what to do to extend that stay and does it before the 30-day stay expires. Now, the third time you take a bite at the apple and you haven't done what you were supposed to do the first 2 times and you're within that 1-year range, you get no stay. So if you're on the eve of a sale, and there was a time many years ago when we were able to, there was a long gap in between when the banks would come back to put something up for sale. So you could get outside of that year and file again and get your stay. But everyone's learning how to move faster. And so as soon as we find an angle, they find an angle. So they're coming back a lot quicker and getting things back on the auction list. So you could find yourself filing 3 times within a year period. And well, it wouldn't even make sense, because the third time, unless there's a change of circumstances and you can get in beforehand to effectuate a stay, you definitely can't file on the eve of the sale. So that's just a sort of synopsis of the automatic stay. There's always the opportunity for the bank, if you're not doing what you're supposed to in the bankruptcy, to file a motion within the bankruptcy to lift the stay, even on your first bankruptcy. So it's important that you work the process. And bankruptcy should not be treated as just something to stop the sale. That's not the goal. I mean, it's the starting point when we get to bankruptcy, but there's much more to do. So for instance, I'll talk an overview of what you have to do with a Chapter 7 and a Chapter 13. There's also Chapter 11s, but those are for folks who have assets over a certain amount of value, or commercial assets, or like a corporation. But for the individual, let's focus on Chapter 7 and Chapter 13. Excuse me. As I said before, Chapter 7 is a liquidation. I don't have anything, I need to essentially liquidate, get rid of all of my debt. It doesn't mean in a Chapter 7 that you necessarily are giving up your home, because there are protections on your home. There's a certain amount of equity, about $200,000, that you can protect in your home in the counties that EDNY services. So the Chapter 13 is a reorganization where you're saying, well, I have enough income and possibly equity to work something out, to work out a plan and propose a plan where I'll be able to pay. And it depends, your secured creditors or a portion of your unsecured creditors, whatever the plan is, but you'll have to make this plan and start making payments to trustee. Now, one of the things you have to do is provide all the documents that your attorney asks for. Documents have to be provided to the trustee: tax returns, bank statements, sometimes appraisals. It's most of what the code requires has to be sent. Well, all of what the code requires actually has to be sent before your 341 hearing, 7 days before. And your 341 hearing is what's called a meeting of the creditors. And that happens in a Chapter 7 or a Chapter 13. And this is where creditors can show up and hear the trustee examine you about everything in your petition: who owes you money, who do you owe money to, everything that could possibly be related to your financial situation. And they can also ask questions. Most times creditors do not show up, though they do receive notice. Excuse me. The banks rarely show up. In all my years of doing bankruptcy, the only time I've seen creditors show up, there's been 2 occasions. When it's been private lenders, like regular guy lends another regular guy money, or something of a mortgage, they may show up at the 341. And also the taxi medallions, when those were going under, the lenders for the taxi medallion loans, they would show up, because they were always trying to discover whether the taxi drivers had other assets. But I don't really see lenders, mortgage lenders, the average mortgage lender that we're talking about here, Carrington and or the services, I should say, Carrington and I won't go down the laundry list of others, but there are some major players, and they don't typically appear at the 341. But they're allowed to, and they're allowed to question you if they do appear. So after you get through the 341, and it's usually, some people don't realize this, but many people are on the calendar for that time. So if you're on for June 6th at 9 o'clock, there's probably at least another 20 people on for 9 o'clock, and then another 50 on for 9:30, whatever the schedule is. So you will have to sit there and wait, hear other people be interviewed. You'll get some of the same questions, and you'll answer concisely, but truthfully. You'll be under oath. And if the trustee finds that everything is in order as far as your paperwork and has no further questions about your paperwork, they will close the 341 hearing. right? If they require more paperwork, which sometimes when we file in an emergency situation on the eve of a sale, we're not able to get all the paperwork together even within that time for the 341 hearing. So if there's or upon reviewing the paperwork that was submitted, the trustee decides or that there's more needed. So they will request that at the 341 hearing. You'll be given a period of time to submit that, but they'll hold the 341 hearing open, generally saying, if we get the paperwork and everything's okay with what we've requested, we will then close it next time. No appearance will be required. Or maybe they need to ask you more questions based on what they received. So after you get through the 341 hearing, depending on when, sometimes if I have a complete filing, I'll file the request for loss mitigation right away. Sometimes it might be a few weeks later, but we do file something called a request for loss mitigation. Now, that's where the person requires some form of loss mitigation. A loan modification is typically what folks are looking for. If you don't require loss mitigation, which in some instances, because this program is fairly new to EDNY. It's been around for a while, but in this long stretch of bankruptcy, it's a newer program. And we're lucky to have it offered in EDNY, which is Eastern District of New York, because there are other districts that don't offer it or don't offer the program the way we have it. So if you reside in the property, it's your primary residence, you are entitled, and you own it, of course, you are entitled to loss mitigation. And so you can make a request. And it's important to understand that the bankruptcy court, if there's already a judgment of foreclosure and sale, you are not going to bankruptcy court to litigate the amount of your loan, to say, oh, I don't know this, I don't know that. You can litigate payments made that may have been not applied because you're having you're engaging in a settlement discussions with your creditors, but you can't go there to try to refight the Supreme Court case. So for some, the strategy might be to get into bankruptcy court before a judgment of foreclosure is entered, but oftentimes I meet people after one is entered. So I just need them to realize that that's not the purpose of the bankruptcy. The purpose of the bankruptcy is to figure out how to make your creditors as whole as possible. So you request this loan modification or loss mit process. One of the things you start with is a loan modification, and you go through the process. Yvette, I'm not even going to touch what Yvette said. It was perfect. I mean, everything was in there, and even down to the faults. So if you get those slides from her, you know exactly our strategy for when we're proposing, when we're preparing a packet and submitting it for loan modification. Now, for those folks who don't need loan modification, and what I mean by that is, some folks are able to reinstate their loan, but over time, like they don't have a lump sum, but over 60 months of a plan, because the max is 60 months, 5 years, they're able to start paying their current mortgage, and working on dividing the arrears into 60 payments or whatever plan. Sometimes people are expecting a lump sum and can pay down and then divide the balance of the arrears and pay it like that. But that was the traditional way of dealing with foreclosure before this program, the loan modification, the loss mit program was instated. It was, you go to bankruptcy court and you figure out a way to pay your arrears over time. So if you're able to do that, oftentimes, because of how long things have gone, people are not able to do that. So that's where we get into the loan modification process. Now, after the loan modification package is submitted, as Yvette said, you will either get missing doc letters or whatever you have to keep up with them. It's important, as she said, the timing, because things expire and it drags on. If you take too long to submit this, then the thing you submitted before expires and it just drags on. And all the time, the loan is getting harder to modify because arrears are increasing. In the Chapter 7, you're not paying anything to the trustee, but you still have the right to loss mit program. So you can get in there, and it does give people a chance to recover. What I try to get the court to understand, and to a certain extent they do, is that it takes people years to get into this problem. It takes years to get out. So it's definitely not a quick fix, and you have to be disciplined. Yvette spoke of the getting rental income and not depositing it fully. So this is my statement to folks. You can't be tax poor, but want to be loan mod rich. Right? So if you're not reporting, they'll let you get away that first year with not reporting the rent, meaning, okay, so your tenant's new and you just started collecting the rent. But if you're going to be telling them that you're collecting rents and showing them bank statements where there's rents, expect that if this process goes on for more than a year, they are going to ask you for that rental income on your taxes. And not just them. Even if the bank slips up and doesn't ask you, the trustee will. The trustee is going to expect, because remember, this is United States government. They're just another arm. So they're going to require, possibly, if they suspect that you'll have tax liability on the rental income, they'll ask you to have a separate account and to be making anticipated payments for taxes to that account. Not necessarily designed to make things tougher, but to be realistic, because a lot of people may feel they can collect rental income and not pay tax on it, but that's not accurate. So, excuse me. So be wary that loan modification packages, there was also a misunderstanding, I should say, or how do they call it? I lose the word, but basically a misconception that you needed to have the bank think you had no money in order to get a loan modification. Nothing could be further from the truth. They are looking for you to demonstrate what you're saying is, I fell on hard times, but I'm ready to resume something now. Maybe not as high as I had before, but something. So you have to show that you're able to make these payments. Here's an excellent example. I will have people come to me, and every month for the last 6 months, their bank account only has $1,000 in it at the end of the month. If you're not paying your mortgage, but you're telling the bank, no, now I can afford the $2,700 mortgage, or, to be realistic, the lowest I've been seeing these days, $3,500 mortgage. Why isn't your bank account increasing by $3,500 every month? That's what they're looking at. So when we come to the bankruptcy court, even in a Chapter 7, if your desire now is to modify the loan and get right with your mortgage, you're going to have to demonstrate that you have this money at the end of the month. In a Chapter 13, it's more than just demonstrate. It's really put up or shut up, because you've got a trustee saying, give me the money, right? So you've got to actually, be able to pay that money. That's why with a Chapter 13, you really have to have the income. With a Chapter 7, I can give you some breathing room. Like, I've had people, while I'm holding them in a Chapter 7, I had one person finish a program to increase their pay. I think it was a nursing program or something like that. They were able to complete that to increase their pay. I've also advised people as to whether they can get boarders legally, or rental income. Maybe there's a space in their home they weren't thinking about that's able to be leased. So I've had to tell people, hey, it's time for a second job, right? And increasing the income. So the misconception that you can, have the lowest income and you got to prove to them that you're poor and you can't afford anything, debunked. That is not accurate at all. If you're fortunate enough to get through the loan modification process and be offered a modification, you don't necessarily have to take what you're offered. You can make suggestions back. You can make a counter offer, we would say. And sometimes they're entertained, sometimes they're not. If you're having a lawyer do it, we can root it in ways that we know are typically accepted. But there is room for negotiation at times, but it also depends on how far in arrears you are. Sometimes it's a take it or leave it situation because you are so far behind. So with Chapter 7 and Chapter 13, the loan modification or loss mit process in bankruptcy works similar. The only difference would be that in Chapter 13, you are paying the trustee, and in Chapter 7, you aren't. Now, the bank in Chapter 7 could file for a lift of the automatic stay to proceed with the foreclosure, but the court tends to carry these while you're in the loss program. So what carry means is they'll sort of hold it in abeyance. They won't make a decision on it. They won't allow it. They'll let the loan, the loss process play out before entertaining that. So if it all crumbles at the end, well, then they'll entertain the motion to lift the automatic stay. But in my experience, and this is some good news, in my experience, even in the tougher times where the interest rates went up and the rate of the time, I guess, it took to get a loan mod increased, persistence is the key. You've got to be tough. You've got to be tough and hold out. Folks who get tired, and you could be in this process for 3 years or more, submitting application after application. They keep asking you, think it's the same thing. Why do they keep asking me for this? What persistence I've found is to be the key, to just keep going at it. Now, the challenge with bankruptcy, and I know I'm here to talk about bankruptcy, is that you've got a limited amount of time to get this done. Because in Chapter 13, they want you to confirm your plan within a certain period. And in Chapter 7, they're going to let the process play out, but it is a Chapter 7, in which case, once the loss program is over, there's nothing really holding you there. So the more you can do on the loan modification side before getting to that point, the better. And just the earlier, the better. I think the message here today is the earlier, the better, because the arrears will be less. If you want to pump the brakes immediately, I've had people file bankruptcy right after being released from the foreclosure conference in Supreme before a judgment is entered. That's a strategy. I rarely have people come to me that's early, but when you do, it's also a different playing field when the lender is in federal court and knows they don't have a judgment of foreclosure and sale yet, because it's not guaranteed. They still have got to prove their case. So if there are little issues, and I have seen lenders discontinue their case because they realize there's issues, or in the answer that we provide, they realize there's issues and they try to start over. So the earlier, the better. Right? It's definitely not a head in the sand kind of situation. And the stigma that's attached to bankruptcy, I think people need to do away with. It is a tool. It is a strategy. I have oftentimes in the community, people are embarrassed. I have people that I have this tool that can help them, and they are so afraid to use it, so afraid, because they're worried. I have people tell me things. What will my neighbors think? What will my employees think? I'm going to tell you right now, it is public record, but ask yourself, are you running around going to the courthouse or fishing around online to look up whether your neighbor has filed bankruptcy or even your family member? I mean, it's a kind of fabricated, it's imaginary that people are really that concerned with your business that they should go so far. And how would they know unless you tell them? Unless, I mean, if they're a creditor, if you owe them money, we have to list them on the bankruptcy. But for the most part, most people don't even know you're in bankruptcy. If you're on a job and you have to say you have to miss a day of work for court, you just say for court. Nobody needs to know why. And to be honest, the only time you need to really go to court in this is the 341 hearing. All other appearances are handled by your attorney. So you go to court once in a good case. Now, if we have to file an adversarial proceeding because there's something fishy going on with the mortgage, still you don't have to go to court until maybe such time as there is a trial, but your presence is not really required in that way. So it's not something where you'd have to miss out from work. The most important thing is to comply with document requests. And I would piggyback on Angela and Yvette about that. When you're asked for documentation, please provide it as soon as possible. And it may seem very intrusive, bankruptcy, because I have to ask questions like, what's in your house? Everyone worries when I ask them about what's in the bedroom, what's in the living room, we have to report everything and a sort of estimate as to what it will be worth if the trustee were to come in and sell everything. Some of you may have heard of celebrities who've had to file bankruptcy. I think TLC, one of them had to do it. Tony Braxton, Red Fox. I may be dating myself a little bit, but and you would see the scene where they're coming in and they're taking inventory of everything in their home. And well, that's because they got really, really valuable stuff, like Emmys and Grammys, and there's stuff there. I did have a client once that had antique chairs, like Louis the 14th chairs or something like that. And they still didn't even go into her home for that. For the average person, there are exemptions for your regular household things. We're just being transparent about what's in your house. I once had a client who had a very extensive sneaker collection. He was a young man, and but he was in foreclosure. And when I said to him that the trustee wants a list of all the sneakers and their value, he started panicking. I'm going to lose my sneakers. He's going to come after my sneakers. I said, relax yourself. He's just asked for a list of the sneakers and their value. And I said, but what's more important, the sneakers or your house? Like, what's the end game here? So we provided the list as requested, and nothing ever came of it. The trustee, because remember, the trustee's trying to decide, do I want to seize these things and sell them to satisfy a portion of the creditor's claims? Can I? Is it feasible? Does it make sense? Oftentimes for things like that, it really doesn't. And we also have exemptions for certain things. But if it came down to it and you had to sell some collectibles to try to reduce your arrears on your mortgage, why should that be a bad thing, right? But I've never had it happen. I've never had it happen. But it shouldn't be something that prohibits you, especially if saving your home is important. So so that's a general overview of the loss mitigation process in bankruptcy court. The process for filing is, I want to say, fairly simple if people comply with the document requests, because your lawyer's doing all the work. They're just asking you for documents. The 341 I find to be painless as well. The tough part is in the loss mitigation process, constantly having to come up every month with the documents and getting that complete and documenting everything you've done. I find that to be hardest for the folks that are either getting cash, or I have self-employed folks have a tough time. It's tough. It's very easy when you got a W-2 and you can just present that, but self-employed folks do struggle to document everything. So as just a matter of practice and business, the more you can do to legitimize your business and your earnings in the sense of tracking things, the better. So I know Yvette said you just got to change how you operate for a minute, but I would say maybe a little longer than that. So I would tell people you've got to keep putting stuff in the bank account. But I get people that'll slip up, like after we submit the package, they'll slip back into your OAs. I'm like, they might come back and ask us for something, and we might have to refresh. And it all, goes longer if you don't. So just stick with the program until you have a signed permanent modification, right? And I'm also going to tell you that you initially get a trial, because we're going to speak it into existence, right? You get a trial mod. Folks used to make the mistake of, oh, I get a trial mod for 3 months. I've seen them anywhere from 3 to 9 months. But the average, let's say, is 3 months. You get this trial mod for 3 months. After the 3 months, you don't get the permanent paperwork, you stop paying. Well, none of my clients do, because I tell them, keep paying. You keep making that payment every month until they give you the permanent paperwork, because it takes some time to get that permanent paperwork done. And people used to fall into that trap years ago, and they would lose their mods because they stopped paying after the trial. So once they start accepting that money from you in a trial, be on time. And I'm going to tell you this, though, I don't want you to hang on it. Being a little late on your trial payment is okay, because there's, just like with your mortgage payment, you have a window before they charge a late fee. Similarly with the trial payment, all hope is not lost if you don't hit it right on the first. But that being said, you could lose it if you're outside of the month that it's due. So you have to be very careful, because they're trying to make you prove that you can honor this mortgage and make timely payments. Is there anything else you want me to cover, Yvette, as far as the loss met process in bankruptcy? I think I've covered everything concerning that.
I think you pretty much covered everything. Yeah.
There are some technicalities. I'll just add something. When you finally do get that modification and you're getting the permanent mod, we do have to do a motion to have the court approve it. I will add this. Before, we would just let the person come out of bankruptcy, right? It'd be like, okay, you don't have to finish the bankruptcy. People kind of liked that because it made them feel like they didn't file bankruptcy. There's really no difference. Your credit score still gets hit. But I've stopped letting folks do that, and I'll tell you why. Because having a judge sign off on that permanent mod stops issues, because the judge forces the bank to lock in an amount. Because what was happening was, when we came out of the bankruptcy and didn't have it sort of blessed by the judge, now it's just between two parties, right? The bank and the borrower. And they would often just pop up later with these arbitrary fees. Oh, you still owe this balance, this amount. And just they would tack things on. And there was no way really to dispute it, because it's just between lender and borrower. But when you're in the bankruptcy court and the bankruptcy judge approves this mod, they go on the record about what the new amount is, so they cannot add anything to that. And that's a level of security that I think is important for our clients, because we learned the hard way once that after we didn't do it through the bankruptcy court, sometimes you think you're saving something by not doing it that way. The bank came back and tried to hit my client with $25,000 extra in fees. So I would say work the process of the bankruptcy and see it all the way through, and have the judge bless your modification. It keeps everybody honest.
Thank you so much, Jjais. I love listening to you work your way artfully through those bankruptcy laws. Many attorneys stay away from bankruptcy. Forget the clients, just attorneys. They're not trying to go into that bankruptcy field because it's really, really, really a specialized field. So thank you for your presentation. The takeaway tonight, again, is that the housing agencies out there, like NHS Brooklyn and the Boy Bunch Center, we're here to save homes. We are here to save homes, and we just need you to defend those homes, and together we can resolve the situation. Usually you're pretty successful when you are working with a trusted attorney, or you're taking advantage of the free services that the Du Bois Bunch Center and NHS Brooklyn would offer. So we ask that if any of you have any problems at all, you will reach out to us. Again, I'm going to drop our information in the chat. I don't think I one second. And you will reach out to all of us. And I also want to tell you, the Du Bois Bunch Center, we have 3 legal clinics, actually. I think I told you about 2 of them. We have 3 of them. One is a estate planning clinic. The other is a real estate clinic. And we also have a business clinic. So if any of you have a business that you would like us to take a look at, again, you have those consultations for free. I'm putting the Du Bois Bunch Center's information in the chat now, and I'm also putting the contact information for NHS and Jjais Forde in the chat. And again, I want you to really understand that if you are in foreclosure or struggling with those mortgage payments, foreclosure sounds like a horrible word, but up until the time of sale, you have a right to do all this. If it's government insured, at certain points in that foreclosure process, the court has to stop the case. The lender has to stop the case and allow the entire loss mitigation process to play out. So some of my clients are denied a loan modification when they do it on their own, and then they come and then we get it done because it's just certain things that they may be missing. So do not take no for an answer. Do not take a denial letter as a period and a finality. You can appeal it. You can resubmit. Some people have submitted loan modifications 3 or 4 times, and on the 4th time, they're successful. Okay. So I like to think most things could be worked out. I also want to tell you about one of our programs that the Boyd Bunch Center has coming up on June 17th. If you're on our mailing list, you're going to find out anyway. If you're on this program and you registered for this program and we have your email, you'll find out. It's a deed theft program. Deed theft is very, very prevalent. It's not just a hashtag or a trendy word that's happening now. It has been happening for a long time. And we want to show you how you can arm yourself again and prevent many of these deed theft scenarios. So that's on June 17th. And at that presentation, we're going to have ACRIS and the New York City Department of Finance, a representative from there, to give you step-by-step instruction on how to work through their website and how you can look up your deed, look up your mortgage, and register your home for certain email alerts to make sure if your deed or anything on your property is moving at all in the records of the New York City, then you get a notification. So that's a very, very important, that's via Zoom. It's not in person. So everyone here should be there. Okay. I also see our executive director of the Du Bois Bunch Center. I see that she's on. I'm not sure if she wants to say a couple of words. Latoya Benjamin. If not, then does anyone have any questions? Let me just look. Okay, how do you register for that seminar? Let me put, if you need to register at all or just be added to our email list. So you get, we provide these programs about once or twice a month. And you can just put all this information. You can just register at that dbpolicy@mec.cuny.edu. I put it in the chat. If you register, number one, you'll get a copy of all the slides. You'll get a copy of all the information again. And you'll get a copy of all the hardship letters and other things that I put into the chat. Okay. Does anyone have any questions at all? How do you register? And thank you for the presentation.
That I just have something I have
Sure.
to correct myself on.
Sure.
I mentioned that we have 3 wonderful judges in EDNY, but I misspoke. I realized we have 6 judges. It's just that 3 sit in Central Islip and 3 sit in Brooklyn. And for the purposes of most of the people, I assume on this Zoom meeting, if your property is in Brooklyn or Queens or Staten Island, you're going to the Brooklyn office.
Right.
Now, if you're in Nassau or Suffolk, you're going to Central Islip, you need to talk to me about that offline because that's a whole nother ballgame. Okay.
There is a question in the chat. Does all of this apply when you are the administrator of your parents' estate? The answer is yes. Actually, that's the best position to be in because now you have the power to negotiate. When you're just an heir, that's why I said you have to do a few things. That's the quote I gave. You have to do a few things if you want to assume the mortgage or use your equity as a down payment. But when you're the administrator, you are the boss. So I always say the first one to the courthouse is the one that's probably going to be the administrator. Yes. So the answer to that is yes. And if the bank sold a debt to a third party, yes. Notes are moved all the time, right? I loan Jjais money and I don't want to be bothered in trying to collect my money from Jjais. So now I give my loan to Ms. Davidson and then she's going to contact Jjais and ask for that money. Yes, loans are moved all the time and they can't change any of the terms on the same exact terms. If I answered that question, Madeira L. Any other questions? And Ms. Davidson, Ms. Forde, do you have any closing statements?
I just wanted to say thank you tonight for allowing us to present this great information. And just like Attorney Forde said, as well as you, Attorney Dudley, there is assistance out there. Please do not sit back and think this is going to go away. If you find yourself facing a hardship, there is assistance out there. Please reach out to your community-based organizations and your trusted attorneys. There is always assistance. And don't try to do this on your own. I mean, we're not necessarily experts, but we're trained. We have to go to continuing ed and we have to do all these things to stay on track and to make sure we're providing you with the most up-to-date information. So please reach out for assistance. Thank you.
Yes, thank you. I would just like to remind everyone, especially since that deed theft presentation is coming up, to be wary of people who come toting pipe dreams. I can't say it enough. One woman told me, they came to my door like angels. Those were her exact words. Okay. And they made her sign off a house and she lost a whole house. So I caution, if it sounds too good to be true, it is. Right. That's just a rule. People showing up at your door telling you they want to help you save your house. Please don't buy it. Don't sign anything that you haven't run by an attorney. And coming to agencies such as NHS Brooklyn, coming to the DeBouche Center, this is where you'll get help from people who aren't looking for anything from you, which is important, right? And who can help you strategize. Because these folks, the scammers, are trying to lead you down a path where they will eventually end up with your home. So it looks like help. They'll tell you they're submitting it. I loved where Angela said that you can sit there and be on the phone and make inquiries about, when I put in loan mods, I put my client's address as well, so that your like email address or contact, so that they're getting information as well. Someone could be telling you they're putting this paperwork in and they're not, just waiting for you to fail so that they can at the last minute say, well, I've got a buyer for you and sign here. And they love to tell you, you'll be able to stay in the home, and they'll sign it back over to you. You'll hear all about it on the Deed Theft seminar, but I'm just saying, be wary of wolves in sheep's clothing.
Thank you. And that's very true. If anyone on this program is, if they already have a foreclosure pending, then you are on a list, unfortunately, because the first thing the bank does, they file a list pendants against the property. Investors, they purchase those lists, and they start. So just don't sign anything. I've had clients who have signed things because a deed to transfer the property is in the middle of whatever paperwork, bunch of paperwork that they're showing you. So you don't have to go through the paperwork to see if there's a deed in there. Just don't sign anything. Don't engage. Do not engage. June 17th, we have a deed theft program, the Du Bois Bunch Center at 6 p.m. via Zoom. Hopefully everyone is there. Again, thank you for spending the evening with us. And on behalf of the Du Bois Bunch Center, thank you so much. Everyone have a great night. Thank you, Ms. Davidson. Thank you, Ms. Forde.
You're welcome, Ms. Dudley. Attorney Forde. Everyone, have a great night. Thank you.
Everyone will receive a copy of this recording via YouTube.
Okay.
Thank you. Bye-bye. I
Take
would say
care.
everyone get home safe, but hopefully you're already in
You're
the
home.
rest. Yeah.
Take
I'm
care,
still in the
guys.
office, but
Okay, bye-bye,
bye.
everyone.